How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for November 20, 2018. Here's the positions as of that date. This week's data was submitted Tuesday last week, but was only made public this past Monday because of the holiday in the States. So the data did come out later than expected, and so kind of put a delay on this report. I didn't put together an usual report for this week because I've just been swamped with updating the website, posting new content, and creating the forum and all that jazz. So we're just a couple days away from Friday, where I will do the new usual report, but I did want to cover the latest positions held by the institutions with you today. So let's examine and see what took place on this last week's report. So we can see that price was reacting to that weekly area of demand right here. Okay, and as that was happening, the institutions closed off a lot of their shorts, reducing shorts from 177 down to 156, and at the same time they reduced their longs from 168 to 165. So what does that tell us? We know that they've been profit taking down at these lows. Okay, so a big reduction, and then all of a sudden a big increase in shorts as price dropped. So that big increase in shorts got price to drop. Once they hit the weekly area of demand, they closed those short positions. Okay, so the profit taking, the move up, and then they forced the move down, and then some more profit taking on the shorts. So essentially what's happening here is when they are taking profits on short positions, it causes price to go up. Okay, and then to close off more shorts down here, what they have to do is increase the shorts to make it go down, and then close them immediately when it's down here. And then what you can see is price moved up just like that from the weekly area of demand. Okay, so what is to take place? Well, we still don't know, because these are two doorways, right? We got a weekly area of supply and a weekly area of demand. Until one of those doorways open, we don't know exactly where price is going to go. We know that there's a likelihood of a move to the upside, but we don't know that for sure. So still watching to see. Right now there's still a bearish bias, but I'm still watching to see if we're going to get that move to the upside. So far the data is just showing me that the profit taking has been taking place and not much else to see from there. And so oil, big reduction again in longs from 561,000 to 528. And then a big reduction in shorts from 180 to 161. So this data represents here a big increase in shorts, helping with price drop, and then closing the shorts as price continued its drop. Right now we are testing the ascending trend line, and we broke through a very important monthly demand zone, creating new demand or new supply up here. The coloration of the cells tells us that they are still very much heavily bullish. So I am expecting some sort of a move to the upside, where I will eventually open up a position to get in short and ride this one a lot further down like that. So right now they're still focusing on taking profits on longs. Eventually I think they're going to push price up, but we'll wait and see for that. As for the US dollar, we had that weekly area of demand get contacted, and then we see a push to the upside. And with this candle right here, price reacting from a daily supply to the downside, we see longs closing from 48 to 45, so that's good. We hit supply and they take profits on long positions. Okay, and you see that long exposure increases from 86 to 88% because of the reduction in shorts as well. And not much else to see here. Expecting a move down eventually. We could get a bigger continuation of a move to the upside, but again, at these levels here, we're seeing these levels in the past being levels where they were taking profits on long positions, and then drop was what eventually took place. So we'll see if that is indeed what takes place with the dollar. As for the Aussie, we see that longs closed from 18 to 15. That came as price was rallying straight up into this weekly area of supply. So profit taking on longs opened from down here, and we see a reduction in shorts as well. So shorts closing and profits being taken on longs. So profits on shorts and profits on longs from the move to the upside. So still waiting to see what's going to take place. Very likely we see a bigger move to the upside and this area get taken out. But we'll wait and see if the data is going to support that in the coming weeks. US CAD. So price was dropping down towards the weekly area of demand. There was a daily area of demand that got contacted, and we see the institutions increasing their long positions. So price drops into a daily area of demand. They add more long positions, which causes price to eventually rally upwards. And with this rally upwards, we also see an increase in shorts. So are they preparing for a slight decline? That's possible considering what you're looking at, what we're seeing with the dollar. All right, so we're seeing with the dollar is at levels where the institutions typically take profits on long positions, which would end up causing a reversal. So if that is to take place, it would put some weight down here, which could be the reason why they are starting to hedge here with their shorts. So we'll wait and see how it plays out. US dollar Swiss franc, we see an increase in longs from 34 to 37,000. We see a slight increase in shorts from 15 to 17,000. This comes as price was reacting right up here. Okay, a deeper penetration of the monthly area of supply and expecting a move to the downside. Neutral sentiment at this point, so not a good time to be adding any longs or shorts or anything right now because of this. You know, we could see that they were very heavily bullish here, becoming more neutral, and a tinge of bullishness here. So we could expect a move all the way down here to this area of demand right here, where we'll see an accumulation for a larger push to the upside. That's what I'm thinking, but we'll wait to see if the positions by the institutions are going to support this. Euro US dollar. So as price was rallying up from the weekly area of demand, we see that longs decrease from 161 to 157, and a big increase in shorts from 198 to 204,000. So still working on increasing their short exposure. We can see that for quite some time, but still neutral in terms of sentiment, which means don't be ready right now for the big move to the downside. So that could be a bigger move to the upside is what's going to take place. Pound US dollar. Slight decrease in longs, decrease in shorts, so still reducing short positions down here. Could be for the bigger move to the upside, which is what is expected. Looking at the sentiment, it is somewhat neutral, meaning not a good time to open up any trades at this point with the pound. US dollar Japanese yen, we're at levels where they typically take profits on long positions, and we see a drop in price. So aggressive with longs, reduce them, aggressive and starting to reduce again. Shorts are cooled off at this point. Very long exposure, very aggressive. So we could see some profit taking here and then a move to the downside. Alright, let's take a look now at the Kiwi. The Kiwi price came right into a weekly area of supply and then dropped. As that took place, longs increased and shorts increased. So the short increase could be for the move down, and the longs increasing to accumulate for a bigger position to the upside. That is what I'm expecting, and I think that is what is about to take place. Still somewhat of a bearish sentiment, but you can see slowly the coloration is turning a little bit more neutral. I think that is going to continue with the weeks as the weeks unfold. Alright, ladies and gents, so that's your Forex Outlook. Sorry, your Forex Outlook. That is your CFTC report for November 20th. I hope it was helpful for you. And until next time, take care.